Americans are also feeling the pain at the pump due to sky-high gasoline prices. A new ABC Ipsos poll finds 52% of Americans blame Democrats and their policies for the spike in gasoline prices, while nearly the same number of people blame President Biden. Joining me right now is Lipow Oil Associates President Andy Lipow. Andy, good to see you. Assess the market for us. How do you see gas and oil trading in 2022?
Well, good morning, Maria. What I would say is right in front of us, we have a COVID lockdown spreading in China, and China's COVID pain is the American gasoline consumers' gain. I now expect gasoline prices here in the United States to drop another 10 cents a gallon to a national average of about $4 a gallon. But on diesel, we're going to see even healthier declines going from just over $5 a gallon all the way down to $4.60.
Yeah. Well, that's a good point. Yeah, we've got prices sliding on those lockdowns in China and plans to release close to 60 million barrels from the petroleum reserve. There's that as well. So you're expecting this to continue as China continues the lockdown. And that's just a demand story. There's also a supply story. Dagan McDowell, jump in here.
Andy, speaking of supply, because I read your research religiously, that OPEC Plus is not pumping at its production quotas. They're about 1.5 million barrels short, and it's clear that Saudi Arabia, Kuwait, and the United Arab Emirates are not stepping up to fill the gap left by Russian oil that's off the market.
Well, this is a significant problem for the world because as the United States has banned Russian oil and European refiners have shied away from it, they're looking for alternative supplies. And if Saudi Arabia, the Emirates, and Kuwait do not fill it, we've turned to the strategic petroleum reserves. And this is where we have a problem going forward because the Biden administration policies has really been the not in my backyard policy of let's ask OPEC, let's ask Canada, rather than looking to utilize the natural resources we have here in the United States.
Yeah, well, how about let's ask Iran, because the U.S. is right now negotiating a new deal to get the U.S. back into the JCPOA deal, and that would mean Iranian oil on the market, not to mention enriching several of Russian nuclear companies, because they're going to get enriched with billions in revenue if, in fact, this deal materializes. What would Iranian oil on the market mean for the market?
Well, I think if we were to agree with Iran and lift sanctions, I think that crude oil prices would drop another $5 to $7 a barrel because Iran could quickly increase production by about 1.3 million barrels a day or more. But they have a significant amount of oil that's in storage that could be released immediately and flood the market.